This is Optimal Finance Daily, episode 963, How to Retire Forever on a Fixed Chunk of Money, Part 2, by Mr. Money Mustache of MrMoneyMustache.com. And I'm Dan, I'm your host, and welcome to Optimal Finance Daily, where I read to you from some of the best personal finance blogs on the planet. Now, today's episode is a continuation post from yesterday from Mr. Money Mustache, but before we get to that, thank you to Fundrise for their support. They're frequently mentioned as a recommended tool in blogs that I narrate right here on the show, and for good reason. Fundrise enables you to instantly access high-quality, high-potential private market real estate projects, from high-rises in D.C. to multifamily apartments in L.A., and each real estate project is carefully vetted and actively managed by Fundrise's team of real estate pros. Fundrise is the future of real estate investing, so visit fundrise.com/OFD. That's fundrise.com/OFD to have your first 3 months of fees waived. For now, let's get right to part 2 of our post as we continue optimizing your life. How to Retire Forever on a Fixed Chunk of Money, Part 2, by Mr. Money Mustache of MrMoneyMustache.com. But won't I run out of money if I do this? That's the magic of early retirement math. The answer is nope, because check out how this plays out. Because of those withdrawals, your account will lose a few shares every year. But because of natural stock market growth, your account will be fighting back and each share will be worth a bit more. Thus, your money lasts much longer than it would if you were just keeping it all in a checking account or stuffed in your mattress. So a quick spreadsheet simulation of this drawdown reveals that your account survives almost 23 years, at which point you are 58 years old, almost eligible for penalty-free withdrawal of your true retirement money. But during this whole time, that other $500,000 in your retirement account grew untouched and untaxed, and it's now worth about $1.2 million, even after accounting for future inflation. In other words, you have way more than enough to live on forever at that point. If you have a really large locked-up retirement balance and a small taxable account, you might want to tap into the retirement account sooner. There are ways to do that penalty-free, too. Here's the overall lesson. It doesn't matter how you have your investments split up between normal investments and retirement accounts. It just matters how much you have in total. Heck, even if you're stuck with $1 million house occupying a huge part of your net worth, you can convert that into livable money. Sell the house, put the cash into index funds, and use the resulting cash stream to rent a spiffy but reasonably priced house or apartment in the lovely walkable area of your choice. Okay, but what about health insurance? If you are stuck in the world's most expensive medical care market like I am, the most profitable investment of all may be salads, bikes, and barbells, because these virtually eliminate the lifestyle diseases that trigger about 75% of U.S. healthcare spending. But even so, most people choose to insure against surprise medical bills, and people with existing medical needs depend on help with those costs. The good news is the politically controversial Affordable Care Act actually handles this much better than most people assume. If I go to healthcare.gov right now, or in my case the Colorado-specific equivalent, and put in a hypothetical 4-person family with a $40,000 annual income in my zip code right now, I see an estimated monthly premium of $140 per month. This represents a cost reduction of $830 per month relative to what a high-income person would pay for the same coverage. So in other words, the United States just has a progressive tax bracket system like other rich countries, chopped up a little differently. It's not great, and to be clear, this is shitty health insurance because it has a high deductible, but at least it's not a retirement buster. Other things you probably don't need to worry about, but everybody does. What if stocks fall or my cost of living goes up? Stock market crashes are never permanent. In the long run, the market always goes up. So all that happens during a crash is that those few shares that you do sell during those brief times when the market is down will hurt your account balance just a bit more. Within a year or two, the market is back up and your remaining stocks are more valuable than ever. If you want even further reassurance, you could just choose to spend a little less money during this time. As for your cost of living going up faster than inflation, it rarely happens, and if it does, you can adjust by spending less in other areas. Most things are in your control, especially if you take a big picture view. You can shop around, move, and alter your lifestyle in a million different ways, and in fact, this is really good for you. Standard retirement advice is based on protecting people from any form of hardship or change, which is completely counterproductive. In the right quantity, these are the backbone of a good life and the fuel for personal growth. Without them, you will melt into a whining puddle in front of a television that endlessly blares Fox News. Every financial advisor, even Betterment, seems to suggest lots of bonds. Why does MMM only hold stocks? The quick answer is that stocks earn more money on average, especially right now in 2018 with bond yields so low. Sure, stocks are more volatile, but volatility only bothers fearful people who look at the stock market every day and fret when it jumps around. As a Mustachian, you don't do this. Lower stock prices are simply a temporary sale on stocks. What about all sorts of other stuff not covered in this article? The absolute key to success in early retirement, and indeed most areas of life, is to get the big picture approximately right and not sweat the small stuff. And design the big picture with a generous safety margin, which allows lots of slop and mistakes in your original forecasts and allows you to still come out with a surplus. For example, in the story I mentioned a moment ago, I assumed a $40,000 annual spending rate, which is way more than almost anyone really needs to live well here in the US, especially once your kids are grown. I completely ignored Social Security, which will benefit most people at a level between $1,000 and $2,500 per month for a big portion of their older years. I ignored any incidental income or inheritances or profits you might make on selling your house someday, and the list goes on. So that's the line in the sand. Although I personally think working hard almost every day after your retirement is good for you, it's also completely optional, and you do not have to earn any money at it if you don't want to. A chunk of money is a perfectly good retirement plan, and the math doesn't care if you're retiring at 5 years old or 85. If you get the numbers right, you're set for life. You just listened to part 2 of the post titled How to Retire Forever on a Fixed Chunk of Money by Mr. Money Mustache of MrMoneyMustache.com. And thank you again to Fundrise for their support. Fundrise is a highly recommended tool among authors that we narrate here. So come check it out. Come by fundrise.com/OFD to have your first 3 months free. Private market real estate has historically provided excellent ongoing cash flow, even as it supports long-term growth. Private market assets like these are a strategy for diversifying beyond public market investments and even other kinds of real estate, like publicly traded REITs. And Fundrise is the future of real estate investing. The platform's innovations power an investor-first model by eliminating the bloated costs and middlemen that have traditionally weighed down real estate investing, saving investors time and money. Unparalleled transparency and real-time reporting let you see how the development of specific properties impact your overall portfolio. Come try it out. Visit fundrise.com/OFD. That's fundrise.com/OFD to have your first 3 months of fees waived. And that's it for today. Thank you for listening and have a great rest of your day. I'm going to see you right back here tomorrow for the Wednesday show, where your optimal life awaits.